Hey guys, it is Julie here with JT Wealth. Today is an exciting day as we are back with our dividend investing series. So let's get into it. All right, guys, welcome back and thank you all so much for being here. We are doing a long overdue update on our dividend investing series. As a refresh, or if you're brand new to our dividend investing series, we are investing $50 per week or $100 per paycheck into a well-diversified dividend-paying portfolio. The goal of this portfolio is to eventually create a nest egg that will pay out over $2,000 a month in passive income. In honor of our dividend investing series, I took it back to old school JT Wealth. I did get rid of the green screen, brought back the old monitor with the logo, and I even waited till the afternoon to film so that I could enjoy a glass of Cabernet with you all. So let's start this video off with a cheers. All right, now, as I mentioned, the goal of this investment account is to invest early and invest often to create a sizable balance that eventually will be able to draw a notable amount of dividends from. But of course, this is a long-term goal. We're talking about 20 plus years of investing. So today I wanted to do something a little different and break that down into smaller, more achievable goals to keep us motivated along the way. It might be a bit easier to stay motivated with your investment plan if you can imagine it starting to pay your cell phone bill, your car payment, or even your rent. So we are going to get into all of those calculations so you can see exactly how long you'd have to invest to hit those milestones. But first, to start off, we're going to do an update on our M1 Finance account and exactly where our balance and holdings sit. So looking at our JT Wealth dividend portfolio on M1 Finance, you can see that our current balance sits at $6,615. We started this account back in July of 2020 and have been maintaining that $50 per week ever since. We've seen a gain of $633 and a return of almost 22%. But it is important to note that that return does include a few $100s in dividends. So we are going to get to our return, not including the dividends here in a second. But first, let's take a look at our holdings, starting off with our top performers. So here are our top performers. In our number one spot, we have AbbVie. We've actually seen a 97% gain on their stock. They are then followed by Navient Corp under NAVI. We've seen a 73% return on them, and Pfizer under PFE up 61%. We then have Shaw up 55% and Coca-Cola up 40%. And just a quick sidebar that this is a money-weighted rate of return. So it does calculate and include the size and timing of our contributions as well as dividends. In the middle of the pack, we do have SPHD up 32%, Cisco Systems up 16%, JP Morgan Chase up 9%, Realty Income up 6%, and Walgreens Boots Alliance up 3.8%. Now, at the bottom of the pack, I do have some explaining to do, but we have Warner Brothers Discovery down 14%, AT&T down 27%, and 3M down 31%. Now, in regards to that group of stocks, you might be wondering what the heck I have $68 of Warner Brothers Discovery sitting in there for. The company doesn't even pay a dividend, but that is because they spun off Warner Brothers from AT&T back in April, I believe, and merged with Discovery. So we were basically given those shares as part of that transaction. And shame on me, but I've been very hands-off on this portfolio the past year, really set it and forget it, and not been actively managing any funds. So that is still sitting in there. It really shouldn't be. I should sell it and get rid of it or something that pays a dividend. And with 3M, they've just been having a tough year. So in a future dividend series video, it'll be a perfect time for us to reevaluate whether we think the stock is going to rebound or not, or if it's time to cut our losses and move on to something else. So I promise we'll do a bit of cleaning up in this portfolio in future series. It's been a busy year, all right? Anyways, since we started the account a couple years ago, we have earned $319 in dividends. And just in the past year, that has included $205 in dividends. So obviously growing as our balance grows as well. Our top payers have been AT&T, Realty Income with that wonderful monthly dividend, and Walgreens Boots Alliance. Now, I do want to take a look at our more recent rate of returns, as I think it really highlights how important a dividend portfolio can be during volatile times in the market. Of course, 2022 has been rough. We've been battling inflation, supply chain issues, and global concerns both in China and the Ukraine and Russian war. So if we take a look here at the past year performance, it does show that our return is slightly green, which I'm just happy to be somewhat flat in a market like this. But if we look closer, you can see we've actually had a negative $200 market gain or loss basically, and down below our dividends of over $200 has been what's keeping our account afloat. What's nicer to see is that this past month we've actually started to see some market gains, now up over 6% with market gains being over $340. I just thought that was the perfect example of how dividends can help keep your portfolio afloat when other things might be going a little haywire. Now, that is an overview of where our M1 dividend portfolio is at. Let's bring it back around to those calculations and how this dividend portfolio will eventually start paying your bills, such as your cell phone, car payment, rent, and eventually build up to something you can be drawing thousands of dollars a month from. To help us with these projections, we'll be using the TipRanks Dividend Calculator. And if you've been wanting to unlock some great research tools with their premium or ultimate subscriptions, make sure you use my JT Wealth link in the description down below to get 10% off. All right, so on our calculator here, our total investment amount is currently $6,600. Our dividend yield averages out to 3.9% right now with an annual contribution of $2,600. So that is our $100 biweekly or $50 per week. Average dividend tax rate 15%. We can expect a good 2% annual dividend increase, and we're going to put in 7% for our expected annual share price increase. 10% is actually the historic return, but we're going to be a little conservative here and put our DRIP in, which is our dividend reinvestment plan, where all of those dividends that are paid out get back into the investment account. So when we calculate our returns here for 25 years, we get over that $24,000 price point, which gets us our $2,000 per month in passive income. Now, if we did want to bump this up to the more accurate 10%, it actually takes us above $40,000, which is well over $3,000 a month. But I always like to stay on the conservative side just to account for any hiccups along the way. So if we want to take a step back with this though and say, hey, 25 years is a long time away. What could it get me in the much nearer term? So if we look at 5 years here, if I can hit the right button, that's going to get us $963 a year. On a monthly basis, that's over $80 a month. So you can now pay your cell phone if you're wanting to start taking those dividends. If we bump it up to 10-year time frame, we're now getting to over $2,500 annually in dividend income, so close to $200 a month. We now might be paying a car payment. What's cool is if we double that, so another 10 years, that jumps up to over $12,000. So doubling your time frame doesn't just double that investment income. It goes to over $1,000 a month. That is the beauty of compound interest. Now here, depending where you live, of course, that could be paying your portion of the rent. Let's consider that we do actually get that 10% as well. That starts boosting up significantly at $17,000 after 20 years, dropping it back down to 5. See well over $1,000. And keep in mind that all of those projections only account for that $2,600 per year. So that is if you never increase that $50 per week. Throughout the course of our investing lives, hopefully we can find a little bit of extra change along the way with different job changes or pay raises, bonuses to help boost up that investment income too. So if you're able to increase that eventually to even $75 per week, you'll see a substantial difference in the long term. So I think that's going to be it for our first episode back in the dividend investing series, giving you an overview of where our dividend portfolio is sitting at and some of those exciting calculations for the power of dividends and compounding interest in the future. I know I've said it plenty of times before, but it's because it's true. I do love hearing from you guys, so let me know your thoughts in the comments down below. Do you have your own dividend investment plan going? What are your goals for passive income in the future? And what are some of your favorite dividend stocks? Of course, please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence before making any investment decision, as we all have very different risk tolerances, timeframes, and goals. If you made it to the end of today's video, you better hit that thumbs up button and make sure you're subscribed to the channel as well. I had to take a break mid-filming as I totally knocked over a bit of my wine and had to clean that up, but it was all worth it. I'm so glad to be back in the old school JT Wealth style. Thank you guys so much for watching. Have a fantastic day and cheers.